Joining us right now to talk about how today's jobs number impacts the Fed's rate plan, former Atlanta Fed President Dennis Lockhart. He's a professor at Georgia Tech. Good morning to you, sir. You saw the numbers. I don't know how much you take away from them at this point, how much you think even the Fed is looking at those numbers in terms of how it's going to impact their plans for 26 and beyond.
Well, I agree with much of the commentary we heard earlier. I don't think this report changes much, quite frankly. The committee is divided, but the body language I picked up from the press conference and some of the communication was that the Fed would prefer to pause for a while, wait and see how the economy evolves. And I don't think this report changes that. So the low probability that Steve pointed out earlier of a January cut, to me, is in line with reasonable expectations.
But what about the rest of the year?
Rest of the year remains to be seen. Of course, we have a change of chair, which means a change of leadership. So, much could change with that. But if you just take a look at it from the economic point of view, a good part of the committee is expecting one or fewer. I think the number is 11 of the 19 right. In their projections last week, one or fewer cuts in 2026. So it's conceivable we see quite a lengthy pause here to just see right. how this economy moves.
Dennis, can you just walk us through, I mean, since you've been in the room, bring us inside the room in terms of, you said that you think things could change if there's a different chairman. How does that work in practice, in the sense that we've seen the dissension on the board, we've seen it in the dot plots and everything else. You get a different person in there, but it's only one person. How does that change the dynamic fundamentally, if it does?
Well, I'll give you a couple answers. One is it is a consensus process. So a chair has to work with everyone else, 18 other participants on the committee, to come to a consensus that can be acted upon in policy terms. And that requires a certain style, and the new chair will, we hope, earn the respect of the committee. The second part of of my answer is when it's a very close call, a chair who has earned respect gets the benefit of the doubt. The preference of the chair usually will prevail. The chair is only one vote and only one person around the table, but the chair can exert leadership when the situation is sort of indecisive.
Do you have a take? We were discussing all morning the Kevins, if you will, Kevin Warsh and Kevin Hassett. Kevin Hassett, by the way, is going to be on the broadcast just in about, 25 minutes from now on Squawk on the Street. The betting markets now say that Kevin Warsh may get this role. Well,
they're both highly qualified, and I think they'd both be fine chairs. I suspect that Treasury Secretary Bessent is getting feedback from some of his friends on Wall Street that Kevin Hassett may be too close to the president and therefore would be interpreted as someone who's going to undermine Fed independence, whereas Kevin Warsh is somewhat hawkish in terms of inflation and is likely to be a bit more independent. That's the way I would read it. But it's going to boil down to a trust factor on the part of the president. And, I still would think Kevin Hassett is more known to the president than the other Kevin, but we'll see.